Yes, exotic car prices finally started to decrease. With prices, collectible car sales and auction activity at record levels, it is fair to say that the market was hot and perhaps even overheated. However, we're entering a new phase, a phase that brings significantly more risk for exotic car owners and buyers. Buying or owning such a car is no longer without risk. We might be entering the beginning of a market collapse akin to the one we saw in the late 80s, but we're not there yet, as the market turn affected some cars way more than others. In this video we'll assess the current state of the market, have a more in-depth look into some of the larger market segments such as the one for the Porsches, and discuss what this increased risk level means for you as a buyer, seller or owner of an exotic car. Should you buy, sell or just go for a drive? Let's have a look at the current market. The collectible car market is perhaps best measured via Hagerty's market rating. I said this before and I will say it again, their articles are usually top notch as they are actually based on data. And so is their market rating. In case you don't know Hagerty, they are a niche insurance agency for collectible cars and have grown to the largest membership organization for car lovers. Their affinity for numbers is also reflected in their market index. It's not just based on an average price over time. It's more rounded and a bit more complex. Consequently, it's less intuitive than the average over time, but much more reliable as it filters out a lot of noise. Their market rating conveys the classic car or collectible car market performance as a number that can sit between 0 and 100. And you won't be surprised to find out that the higher the number, the hotter the market. Most of the time, however, it's likely that the score sits between 40 and 60. The scores over time are namely expected to follow something called a bell curve. And this means that, over time, scores are most likely to fluctuate around the mean of 50, while the chances of being higher or lower than 50 decrease symmetrically when you move away from the middle. An additional benefit of this is that the rating moves fluidly in the 40 to 60 range, but becomes more difficult to move at its extremes. If we look at its development over time, we can see that the rating topped in June of this year with a value of 78.22. This is an all-time high and, as we discussed before, a highly unlikely rating. It also marks the start of a paradigm change. Yet, it doesn't take much to see that the rating is not crashing. The current value of 76.9 still indicates that the market is superheated, and I think that this is an important distinction to make. It differs, for example, to what we can see in the market for normal used cars. But what caused this trend change and the most recent drop in the market rating? Hagerty doesn't disclose the exact way in which the rating is calculating, but it does provide enough information to get an idea. You see, the index is rather smart as it uses the weighted average of 8 different components. These are in order of importance: the Hagerty price guide editorialized values, auction activity, expert sentiment, the Hagerty price guide indices, private sales activity, insured values for the broad market, insured values at the high end, and correlated macroeconomic indicators. Are you still with me? Now I won't bore you with all of them, but let's discuss the 3 most important reasons as to why the indicator fell. But before we do that, I would like to get your attention for today's video sponsor. Today's video is brought to you by Exclusive Auctions. Exclusive Auctions is a full-service online marketplace featuring auctions and classifieds. They specialize in race cars, sports cars, exotics, tuner cars, high performance, resto mods and specialty vehicles. They have many really great features. With their gold listing package, sellers pay 0 listing fees and receive 100% of the selling price of their vehicle. Their buy fees are some of the lowest in the industry. They offer full service after-sales support with everything from pre-purchase inspections and transport services to escrow services, ensuring a safe and secure transaction for both buyer and seller. Click on the link below or go to exclusiveauctions.com and register to bid or list your car for sale today. But now then, the 3 most important reasons as to why the market rating fell. First of all, there's a slowdown in the private and auction sales activity. This though doesn't come as a complete surprise. Winter is coming and this typically means that the market is a bit slower. The slowdown is then also relatively small and not the main factor that caused a drop in the market rating. The slowdown is caused by the economic developments. Hagerty specifies that it is for the first time since January 2010 that each of the 4 macroeconomic indicators used in the market rating decreased, and these include things as the retail sales, the price of gold, the home price index and the S&P 500. If you own an S&P 500 tracker, I don't need to tell you that stocks plummeted. Now at first this might seem a bit strange, right? All of these variables aren't directly linked to the collectible car market, yet they do affect the rating. Hagerty does then also note that there is no direct causation between these indicators and the collectible car market, but there is some form of correlation. So what about the actual prices? Did they even come down? Well, yes and no. And this is a key point. The Hagerty 100 index, an index that is a weighted average of the 100 most insured vehicles in the price guide, dropped 1.37 points. However, their blue chip index, an index that is based on the average of the 25 most sought after collectible cars of the post-war era, experienced its largest increase in 2 years, and this is mainly driven by the record-breaking Pebble Beach auction. Now, since this index consists mainly out of cars like the Mercedes-Benz 300 SL, it is fair to conclude that there is an increasing divergence between the upper part of the market and the normal market. Now, what's interesting over here is that many of the developments in the Hagerty market rating are transferable to the prices for more modern sports and supercars. Already in the winter of this year, I showed you that price trends are flattening, and during the summer we discussed that many markets were topping. More recently though, most of my market updates contain small price decreases. And this topping pattern matches with the development in Hagerty's market rating that mainly consists out of collectibles. What's also similar is the growing divide between the market segments. Some modern sports and supercars saw a relatively large drop of 6 to 7%, whereas prices for others did not change or even continue to increase. And this contrasts to what we saw before. We saw values increase across the board during the pandemic, but we are now seeing that values are not decreasing in the complete market. And this of course increases the uncertainty and the risk. So let's have a look at some of the markets that saw relatively large price decreases. You can find detailed market analysis for all of these cars on my channel, so head over there if you want to know more about a particular car. Starting with the largest and perhaps the most loved market, the 911 market, we can see that there are some surprising cars in the list. Over here we have the price development for the used 992 GT3 market, split by the touring and the non-touring models. And I think that we are all aware that prices for these cars are high and that it is extremely difficult to get your hands on one. Yet, as we see here, values are coming down. The median price for a GT3 was $325,000 in January, while it's now $295,000. So that means that prices dropped by $30,000 or 9.3% during the last 10 months, and this applies to both the PDKs and the manuals. That must hurt a little, at least if you bought it with the idea that values would continue to climb. Things are not much better in the touring market. Prices dropped by 5.7% or $20,000 during the last 6 months. Now I don't think that this comes as a complete surprise. Remember that the car has an MSRP of $161,000, so even if you add half of the car's value in options, you're still looking at a hefty premium. However, it's not just the 992 GT3 market that's correcting. Also the 991.1 is getting slammed. Over here you can see that prices decreased by 6.9% during the last 6 months. Just as the decrease in the 992 market, the drop is statistically confirmed, and this means that it is unlikely to be the result of chance. And we discussed in the previous market updates video that this could be related to the ending warranty period. Moreover, this is supported by the supply pattern. In January 2020 there were 90 cars for sale, and this level decreased till 45 in July and then started to increase again. Right now it sits at 59 cars. The price decreases, however, are not limited to the GT3 market. Also the turbo market is correcting. Over here we have the 992 turbo price trend split by the base and the S models, and this shows that prices decreased by 4.3% in the base market and by 5.4% in the S market. Again, quite a serious but perhaps not surprising drop. These numbers are by the way based on 150 to 180 cars for the Turbo S and 30 cars for the base model, so they're solid. In the beginning of the period supply was very low, and this resulted in these large confidence intervals. Now it's not just the 992 turbo market that is having a difficult time. Prices in the much beloved 991.2 turbo market are also down. Over here we can see that prices in the base market dropped by 5.6% during the last 3 months. The Turbo S even lost 6.8% during the last 6 months. Now what's interesting over here is the similarity in supply patterns between the GT3 and the turbo market. Also here supply developed in a V-shape, meaning that there are almost as many cars for sale right now as at the start of the pandemic. Now if we move on to other Porsche models, we can see that also they are affected by the recent market trends. Over here we can see that 718 Cayman GT4 prices decreased by 4.3% between May and August. A slightly smaller drop than in the 911 market, but a significant deviation from the previous price increases. Also 981 GT4 prices decreased, as they saw a drop of 6.8%. But as you can see from these trends, there's not really any reason to panic if you own the GT3 for a long time. Prices are still higher than a year ago. So we spent now quite a long time with the Porsche market. This is the most popular brand on the channel, so it's only fair to give it a little bit more screen time. However, it's not just the Porsche market that's correcting, even Ferraris are no longer safe these days. Starting with a car that's unreachable for most of us, the SF90, we can see that values have been falling since its introduction. Between the end of 2021 and September 2022, they decreased by 12.6%. And considering the reviews that appeared lately, the 296 GTB seems to offer more bang for buck. Looking at the more traditional mid-engine cars, we can see that Spider prices came down the most. And this of course might be a seasonal effect as the winter is coming. Over here we can see the prices for the 488 and 458 Spiders. And this shows that 458s decreased by 4.8% and 488s by 4.2%. And these are smaller decreases than we saw in the 911 market, but they deviate significantly from the uptrend of last year's. Now this pattern where the Spiders are losing more than the coupes is also visible in the McLaren market. Over here we have the price trend for the used 720S Spiders, and this trend shows that prices dropped by 3.6% between May and August. Unfortunately, it's a bit difficult to get a correct estimate of the price development during this year, as I don't have any data between May of this year and May of last year. But it's clear that prices decreased. We can see the same pattern in the 570S Spider market. Prices decreased by 4.8% between May and August. I also included the coupes here as a reference, and we can see that they decreased by 2.9%. So prices were a bit more stable over there, but there's not much in it. So we covered now quite a lot of numbers in the Porsche, Ferrari and McLaren market. Some surprising, others perhaps less surprising. But I still want to share two additional markets with you before we wrap up and conclude. First up is the one of the R8. Prices were hit hard in some segments. Over here you can see the price development for the second generation pre-facelift V10s, split by the coupes and the Spiders. And like we saw many times before, prices topped. Coupes came down by 4.9% and Spiders by 5.9%. Supply is relatively low in these markets, but the fact that we can see a large similarity between the segments shows that the price decrease is probably a real decrease. The drop in the R8 market is also in the same ballpark as the one in the Evora GT market. Over here we can see that prices dropped by 5.1% between July and October. And besides the general dip in the market, these cars are also subject to a traditional depreciation effect. They're relatively new after all. Alright, we covered now a large variety of markets and all of them showed price decreases. But at this stage, it would be wrong to label these decreases as a full-blown market crash. There are a few things we need to take into account. First, the price decreases are not representative of the complete market. There are also cars for which prices remain flat or even continue to increase. I just showed you all these drops to highlight that the risk level increased. Last year it was quite evident that no matter what you bought, it was likely to go up in value. During the spring this changed as price trends were flattening, and now we can see that some segments are starting to come down. Second, we need to keep in mind that these price drops are relatively small compared to the run-up that these cars had. Out of the cars for which I'm tracking the prices, I deliberately picked the cars with the largest decreases. And as you saw, this means that prices mostly dropped between 4 and 7%, with exception of the 992 GT3 market. So when you consider the increase of 25% or more during the last years, these corrections are not so bad. And with that it's time to wrap up and conclude. Both the development in the Hagerty market rating and in the asking prices for exotic cars shows that the market topped. If you're subscribed to this channel, this doesn't come as a surprise. The first signs already appeared during the spring. It's interesting though that there's such a large variety in the price trends. This is observed by Hagerty, and we can also see this when we look at the asking prices. I showed you market segments in which prices decreased, but as we discussed, there are also segments where prices increased. But more about that in a different video, so stay tuned for that one. Now all of this, so a market that on average topped, combined with a large variety in price trends, shows two things. First, and this is quite obvious, it shows that there's an increased risk level and increased uncertainty. Second, it shows that right now we cannot say that prices are plummeting. During a market crash, I would expect that the majority of the market comes down, and this is not the case at the moment. But what does this mean for you as a buyer, seller, or owner? It's impossible to talk about this without discussing future values. And when it comes to future values, I like to think about them in terms of scenarios with probabilities attached to them. And I think it's reasonable to say that a scenario in which the price frenzy continues upwards is unlikely. Prices just increased by record rates, so given the economic climate, it doesn't make any sense to expect another round of price increases. That is, leaving aside some outliers. It's much more likely that we will see a stable price development or price decreases. And out of those two, I think that a continuation of the downtrend is perhaps most likely, but this of course is not based on a quantitative assessment. I devoted a full video to evidence surrounding the prediction of car values on quantitative analysis, and you can click over here if you want to see that video. But the moral of the story is that the error margin is quite high. So as of now, my opinion on the price direction is purely based on qualitative arguments. But what about the magnitude of any potential further decreases? Personally, I think it's unlikely that we will see an acceleration in the price decrease. When it comes to the car market and the economy in general, there has been sufficient time for people to switch their mindset. So much of the information regarding the price drivers is already priced in, but this of course only holds if the economic situation doesn't deteriorate any further. Additionally, it's important to keep in mind that exotic cars tend to perform reasonably well in times of recessions. The upcoming quarter will confirm if the price decreases that we just saw are the beginning of a new downward trend, or that they just depict a dip after which everything will stabilize. Therefore, if you're looking to buy a car, it might be worthwhile to hold out for a moment. There's a very low chance that prices go back up again, so there's a low downside risk into waiting. However, if you're on the other end, the situation is a bit more difficult. The time to sell was during the spring and to a lesser extent during the summer. Selling now means that you lose out on some profit. But again, I think it's unlikely that prices will go back up again to where they came from, so if you must sell right now, it might be wise to take action. Having said all of that, I think you should always buy the car because you love it first, and maybe second because you think that values will develop favorably. But opinions differ on that topic. Now before we end the video, I would like to remind you that you can find detailed market analysis for all of the cars that we discussed in this video on my channel. Also, if you like this data-driven approach of analyzing car markets, please consider subscribing. As always, thank you for watching, and I hope to see you next week for a new video.